Welcome to the HMO Property Show by investors for investors. Brought to you by the HMO Property Co, Australia's leaders in impact investing. Investments made with the intention to generate a measurable, beneficial social or environmental impact alongside a positive financial return. Catch us weekly as we discuss all things cash flow positive property investing.
Welcome back to the HMO Property Show, and today I've got a guest back on my podcast, which was previously called the Perth Entrepreneurs Podcast. It's Ruth Hatherley. Welcome back to the first time to the HMO Property Show podcast.
Thank you very much, Neil. Thank you for having me.
Thank you for coming back. It really is a pleasure to have you back, because last time we spoke, there was quite a lot going on in your business, which is Moneycatcha. Since then, there's new arms and business divisions that have come out of this as well. And I was listening back to the other podcasts that were recorded almost 2 years ago now. And we spoke about things like open banking and the way that your business and software was essentially revolutionizing the way that transacting on a property happens. Is that right?
Yeah, I think we were really in the exploration stage at that time, and I was talking to you about what's been made possible with the legislation of the consumer data right, and the first rollout of that was going to be in the banking sector called open banking. And I think since then to now, we have a product in production, in market, and I think that's really, when we talk about, I imagine we're going to talk about it after, is delving into the evolution of that, not only as a legislation as sort of the top end, but then what's happened underneath that with not only banking, but it's gone into the electricity market and goes into telco and sort of rolls out further, but how that's gone very deep now into the vertical of banking and finance. Yeah.
So when I'm looking for guests to get on the show, obviously I look back through some of the old guests that we had and I was like, oh, Ruth would be great now, because what a world we live in at the minute. We're just talking about the last time we spoke as well, interest rates are at a record low. Now they're back up to what seems normal really, but property prices have crept up quite a bit in that same time. So where they were normal previously, it seems quite high now based on median house price, isn't it?
Yeah, that's it. And I think we're showing our grey hairs here, but I think if you think back, 15, 20 years ago, these interest rate levels seem quite normalised. Yeah. What we had before was very abnormal, but for a very long period of time. And so there was a decade, or half a decade worth of people coming into the market that knew nothing different. And so the shock of this, the speed at which those rate rises have happened, but also, as you say, the speed at which the property prices have gone up at the same time. I think it's created, a double impact on those buyers and sellers in the market, and those people that have finance, which calls for even more focused advice and services that can be provided to help people making those decisions.
Which is exactly where Moneycatcha fits in.
Yes, that's what we try to do.
So for the people that haven't heard the other podcast, what is Moneycatcha?
Yeah, so Moneycatcha is my parent company that really creates technology to be able to solve challenges in the home loan and lending market. What we did, we were on the verge of doing when we had our discussion back in November 21, was raising some capital to really power some innovation of technology that was going to focus specifically on the home lending market. What we have done since then is in March of this year, we launched our brand of RegChain and a product called Stride. What that product Stride does is to be able to help anyone that offers home finance products to consumers in the market to be able to understand what the most competitive product and price is for that customer, and for them to be able to identify any customers at risk in existing loan books. So that means that our product now is relevant for brokers and aggregators in the market that are selling home loans to consumers, and we now know that they're selling nearly about 70% of all home loans in the market. Huge. It means that we can power technology platforms that are being used by people that are selling home loan products, and so that is another part of the market that is doing home loan transactions. And we can still service the traditional market we were working with originally, which is the lending and banking finance market. And
that lending and finance market, that would be more client-based or customer-based, where with RegChain now, it's more broker, institutional based sort of business to business instead of businesses at B2C.
Yeah, so we're still B2C in all three of those sectors, but we're really calling that aggregator and tech partner space like an enterprise space where we're kind of the under the hood technology that is powering their existing platforms or their existing software with more, real-time insights with some further innovation to the technology.
Right. And it kind of sounds similar, and I know it isn't, but just for other people that are thinking this, it sounds similar to some of the compare the market sort of product or the Lendy type products. What I don't think you did touch on there is the speed in which this can happen as well. Is that right?
Yeah, so we do, and those comparison sites, and absolutely we can power some of those comparison sites and those websites, the technology that sits behind them. And it's because we really have two parts to our technology. One is around being able to understand real-time product and pricing policy from banks in the market, and that is updated on a daily basis from the information that they release into the market. And the second one is that we have a really sophisticated credit confidence engine. So there's a relationship between product and pricing policy and also the credit confidence of the applicant. And often you'll find on comparison sites and places like that it really is only the first part of that equation. So it's a you may be eligible for this kind of a product, but click here further to be able to understand a more specific answer to your situation.
Indicator as
That's
such.
it. It's a better word than all the words I just used. Yes. Whereas what we can add is a level of specific confidence and more a level of accuracy to that product recommendation, and that can be applied. So those comparison sites are really just about or often about new lending to the market. We can actually power insights and results over really large data sets. So our tool is unlimited in terms of the number of transactions we could process at any one time, which really focuses our attention on a B2B solution, which you were indicating before. If you've got a lender or a broker or an aggregator that has hundreds or thousands of records that they're trying to understand that might be at risk, our tool has the capacity to run that single assessment over all of those records and provide very customized results for every one of those data sets, all in real time.
Yeah, wow. So when it is changing the way things are done, it's kind of like a broker that already knows everything and can get the best product in front of you almost instantly.
Yeah.
Where do you get the data sets from?
Yeah, so you've got two options. I think we talked about what open banking would mean, and it's the consumer data right in general, but then specifically what open banking would mean to this sector in the coming years when we spoke in November 21. What it is, it's a reality. It's here today. So
it's being used right now.
It's being used right now. There are technology platforms in the market today, and we have a product in production that we are able to ask a customer or consumer to consent to sharing all of their banking and finance data in an instant, in a click of a button. The consumer has the power over what data is shared from what institution and for how long and to which provider. So the consumer is in control. It's exactly like when they used to go to a broker before. But what they would have to do is they would have to download all their statements. They would have to email or send across PDF files.
Isn't it?
Yeah.
There's always something missing.
That's right. Or they would have to pay the bank for that data. That was the worst scenario.
Yeah.
Whereas now the consumer data right and open banking in particular has meant that data is now owned by the consumer. And the consumer has the ability to consent for that to be shared with anyone. And so we can power our insights from two sources. They can be just simply data entry that is done by the user of the solution, or a data packet that is sent via API from one technology platform to another. And the third way is that we can actually manage that consent journey for a consumer and acquire all of that data from the financial institutions directly, which means that the product recommendations that are being made are based on the actual real-time data of that customer's financial position.
So in a way it would be beneficial for a client to actually adopt the open banking Do they need to set up a profile? How does it work?
No, they don't. So they need to use a platform that is CDR enabled and that has a consent mechanism like what we do. So we enable that consent mechanism for our trusted advisors. So brokers there's different classifications of users and who can and can't handle and store data with open banking, and that's all been legislated and monitored by the government and ACCC, etc. We work within a trusted advisor capacity, and brokers are trusted advisors under the legislation, which means our technology can enable those brokers as the trusted advisor of the customer to start a consent journey for that customer. And so as soon as their trusted advisor, their broker, does that, they'll receive an alert, an insight, an email, and that starts the consent workflow for them. So you don't have to do, as a consumer, you don't have to prepare your consent for sharing CDR data at all. It can be transactional based. So if you're sitting in front of your broker uses our technology, your broker would then say, hey, in a minute there's going to be an email in your inbox. You open up the email, off you go. You start sharing the information straight away.
Simple as.
Yeah, it is as simple as.
Is it stored on the blockchain then? Or is there a way that evidence or that history can be tampered with?
So it depends upon what your data storage compliance requirements are with your CDR provider. So we don't use the blockchain for ours. We use a different storage system that is approved and secure in that relationship and contract that we have. We have to pass special data storage rules, and we have to do that both from our CDR provider. We have to be assessed independently to be an outsourced service provider by an assurance assessment company, and we also comply with AWS or Amazon data storage requirements. So we've kind of got 3 layers of data security that we are compliant with.
Right. So we've got the client there, we've got the all the data that we need to get the best package in front of them. What's the next step?
Then we would immediately provide some product recommendations for that particular customer.
Yep.
And that would be surfaced up either to our user. So if that user is a broker, that would be passed up to them.
Yep.
If our user is a technology platform, they are provided to that technology platform.
Yep.
And then the customer is sent on the journey to select that product. So there are 2 ways that our customers are using that. One is that they are taking those recommendations and then starting an interactive conversation with that customer and starting a home loan application process. Or our technology customers are going to take that and decide whether that is going to be the end of the journey with the consumer and pass them on to a broker, or whether they're going to pass that on to their in-house brokers that are inside their own organisations. But that's a decision for them. Our journey with the consumer stops at that point there in terms of our platform.
Could it eventually replace the broker?
I think it's a really interesting question. So I think theoretically we have the capacity to expand the workflow journey that we have at either end. You know, we could start the engagement with the consumer, or we could, continue down the path of completing the home loan application. Yeah. There's a lot of accreditation and licenses that would need to come with that. So there's a compliance obligation that you would want to do with that. And then I think there's a really interesting behavioural awareness that we need to have about Australian consumers. When we met back in November 21, brokers were writing about 56% of home loan applications in the country. If we reflect on last quarter, they wrote about 69%. So consumers in this country are moving more and more towards the one-to-one interaction with a trusted advisor, and moving further and further away from digital platforms in terms of completing a complex transaction like a home loan. And so I think there is a portion of the Australian consumers that would be happy to do a home loan application on a digital workflow. But I think the evidence at this stage shows that we really need to be able to use the technology to support those that consumers are trusting to do their home loans.
Yeah, so it could be something that can be adopted in the future. But right now, brokers play a pivotal part in this, purely because of the amount of volume in loans that they write, or because you see them as an integral part of that sort of interface between the client and the software itself?
I think it's more for the second, more the latter of what you've said. I think that at the moment that the home loan process is it's still very, I've always said it's like a factory machine line. there are so many moving parts to a home loan application. And PEXA is a great example of how it's still not working 100% digitally. Now, PEXA was set up before my company was set up, and they are the digital space to be able to complete the settlement. And they need every single solicitor, every single conveyancer, every single bank, every single titling office on board before they can complete a digital execution of settlement. Now, they've come a long way in the last 5 years, but they're still not doing every settlement digitally. That's just the very end step of a home loan journey. If you think about everything else before that, if we can't get the end step right, So I think where the brokers have got the advantage, and the brokers that have got really strong admin support teams, is where they're really the consumers are being quite sticky with them, in that they are managing all of the hiccups that go along this journey. The product selection piece is just the first part. The hardest part is, once we've got that, how do we get it into the bank? How do we get it approved? How do we get your documents in time? How do we get your valuation ordered? Like, all of those other things are still very, very manual and need to be fixed.
Yeah, and it's a very clunky process as well, isn't it? So average, normally we're seeing 28 days finance, 28 days settlement. Some of the product that we do is 60 days finance, because we use a commercial val as well, so someone's got to physically go out and write a commercial val. But you've managed to speed that process up as well, haven't you?
Yeah. So we can get if they use the entire capability of our technology. So there's 2 API services there's 3 actually. So there's 3 kind of different products that we have in the Stride engine. In the Stride broker product that we took to market back in March, we're really just focusing on one of those services, which is the product and pricing selection tool. So being able to understand any product and pricing offers, or the most competitive product and pricing offers for a consumer data set at any given point in time, whether that be on a single record or multiple records at once. So that's kind of the first part of the tool. The second part of the tool is where we that's the biggest part of our IP, is a proprietary credit confidence engine, where we've been able to create a very intricate credit confidence scoring tool that is aligned to every single data element about that consumer and has a relationship to the product and pricing policies in the service one. So to have a more comprehensive and accurate product and pricing offer, you then need to consider the credit confidence score element of that applicant data set as well. And then the third piece of that is if that data set is being powered by CDR data or by open banking data. And so our third product enables the consent journey, where a consumer can consent to share that data packet. That data packet then gets populated into the credit confidence engine. The credit confidence engine can assess the credit confidence score of that customer and then help make the product and pricing recommendations or product and pricing offers for that consumer. If a customer of ours chooses all 3 of those, the confidence and accuracy level of those product offers is very, very high, which means it reduces, and also the data collection time is instant. So it means that it reduces the data preparation side and it reduces the product offer time. So you're sort of talking about, a number of days into seconds.
Which is phenomenal.
Would be better.
Yeah. So right now the finance application process, like you said, they find the product, they fill out a fact find with a broker, and then all that information needs to be kind of unpacked by the broker or the banking team as well. That's a manual process still, isn't it?
Yes.
Yeah. So and that's why it takes 28 days.
Yeah.
So with your software, it's over in a matter of seconds because it's all digitalized. The credit scoring system, is that like an Equifax thing where they give them a scoring based on how good they're at managing finance and spending and stuff like that? Yeah,
so it's a relationship between all of the data elements that are being captured about that customer. So it's not just about the assets and liabilities and the repayment history, for example. So a lot of the Equifax scores and things like that is based on that. It looks at so there's a data standard in the mortgage industry, and it's called the Lixi-Cal 2 data standard. So all that means is there are standards of how the taxonomy that you use and the data that you collect, and then that data packet can be shared instantly and with a good level of quality between different organisations that participate in that home loan journey. So a broker could send it to a bank could send it to a valuer could send it to et cetera, if they're all using that same data standard. So LICSI is an industry body. It's a data standards body that most of the banks and brokers and finance companies and technology companies subscribe to. So we've used one of those data standards as the core of our scoring system. The secret sauce is how we rate those different data elements and weight them. And then, you would get a very comprehensive credit score confidence score, about that particular consumer based on, and the cool thing is where it becomes very powerful and that speed is really reduced is if the lenders are comfortable subscribing to that credit confidence policy, and that's exposed, not the actual policy itself, but that API is exposed out to those that are creating the home loan applications. And that's really our long-term vision of where we would like to go, is if lenders can subscribe to participating in secret, so they don't actually have to. One of the biggest concerns of lenders is to expose their credit policy out to those that are originating the home loans, and then it can be gamified, which is what we have absolutely prevent. You can't gamify our credit confidence policy. So if that was the capability to connect to that with a data packet was realised, then the product selection and the offer could be made to the consumer by the home loan originator, whoever that is, whether that be a platform, a person, or an institution. And then the bank would not have to recheck that information because it's complied to a policy that they've created. And so what happens at the moment, where a lot of the challenge is the evidence and the data interpretation has to happen twice. The broker has to do it, and then the bank person redoes it again. And so what we would ultimately like to do is to be able to break down that barrier, and that the technology hides the intelligence, but both sets of organisations trust that the technology outcome or the result that is provided is appropriate in line with their particular policies.
Wow, lots going on. I think there's a lot that goes on in the background that I don't think people are aware of. Correct. When they're applying for a bank loan, for a mortgage, for instance. What about the settlement process? Because there's 28 days for settlement there, isn't it? We've got the loan there. It's all been approved. Why does the settlement process take 28 days?
Because you then have to go through all of the stages of creations of documents, and often if you get, and especially if you're waiting for unconditional approval, so you've got conditional approval which can happen with some conditions attached to it. Yep. First parties, you've got to wait for people to meet those conditions, and a lot of the time that's either about paying down or reducing debt, or providing evidence of things being done or bought or sold or whatever.
Credit card limits reduced as well. We see that going quite a bit.
That requires human intervention and then also record keeping. And so there's part of your time delay. And the other part of the time delay for the settlement piece is the coordination between all parties in the transaction. I just settled a property with my parents earlier this year, and on both sides there were two parties involved in the buyer and the seller situation. But then a particular event had to happen on our side in order for, and it was a settlement condition, and so we had to ensure that we allowed enough time for that event to happen so that we met settlement and didn't breach those settlement conditions. So that might be part of your finance. So you apply for the finance with the understanding that you know that these things are going to happen, and you kind of cross your fingers and make sure they happen in time. So I think they've got nothing to do with the finance process and just to do with human lives. And I think you're never going to get around that.
And with open banking and your software, that would be reduced because they wouldn't present a certain package to them if they had all this kind of...
They would, but you would still... So you'd still have those conditions. I don't think you're ever going to get... I think it's very, very viable that you could do same-day refinances. And I think it's very viable that you could do very short periods of time, single property, owner-occupied, 20% or more deposit PAYG employee applicant transactions. But I think once you've got multi-party, complex security property, that kind of stuff, there's always a lot of background maneuvering that needs to happen in order to execute that transaction. And I think that's where your unconditional approval to settlement time will still need to be weeks. But I think you can get that unconditional approval much faster with the right technology and trusting the sophistication of that technology. But the critical piece is that also that all of those decisions are being made on real-time data. And I think once the mainstream adoption of open banking becomes exactly. It is mainstream, and that the traction is better. I think you'll see some very sharp turnaround times, and then all of a sudden those that are not on that runway will have to jump on that train pretty quickly. Otherwise they're going to be left behind. No one's going to want to go to a bank that's got a 28-day turnaround time when there's 15 banks in the market that can give you a 48-hour turnaround time. That's really where we're going to. Hopefully, if I'm in your podcast in 2 years' time again,
I'd love to get you back see where we're at.
Hopefully that's what we'll see.
Did you say it's possible to do a same-day refinance there as well?
Absolutely, there would. Absolutely.
And then your kind of classical mortgage applicant, the double income, no kids, 20% deposit, 80% loan, first home buyer. What would be the turnaround time for that from finance application to settlement?
I think that you could do those in a week to 2 weeks. If you talk about, you'd be able to get approval in those. Let's be generous here. Let's say that not all the information is available in open banking, or the customer doesn't consent to something, or something happens where they've got to get a physical document or what have you. Let's say it's 48 hours, or let's say 2 to 3 days for unconditional approval, but your valuation can be taken as the offer and acceptance, or it can be they can adopt a valuation online. They don't have to visit the property. Your documents can be issued electronically, and that you can get those back into and there's no problems on the seller side. That's the other issue, is you've got to make sure that you've got a pretty sweet transaction from a buyer and seller perspective. You get those documents signed electronically and back into the bank, let's say in another 2 to 3 days, and then you need the bank to give them generously 2 to 3 days to prepare themselves for settlement. You could probably nail it all in 2 weeks.
It's incredible. It's incredible. It brings it down from 2 months to 2 weeks.
But would we sell more properties? That's an interesting question.
Well, there's none to sell at the minute.
That's true.
The problem we're trying to solve. We're trying to build them fast. But,
that's true.
We were just talking about the state of the market before we got on there. What do we need for mass adoption for open banking? Because you don't hear much of it. I didn't know anything about it until I spoke to you.
Yeah, that's right. It's not being sold to consumers, and I think that's a really interesting. So the government has invested a lot of time and money in creating the legislation and releasing the guidelines and the protocols that go with it. And also they've done a great job of iterating it out. So they originally started just with the big four banks to have to comply. Then the rest of the banking sector had to comply. Now they're moving into the non-banking sector to comply. And that's sort of going vertically down into the banking sector. They've also started rolling it out into utilities. So the electricity's industry, and then going to the telco industry. So they're kind of saying, we're going to create the framework and the legislation, and we're going to create the guidelines and the governing body, but we're leaving it up to the organisations in that industry to create the adoption and build the infrastructure and the highways in which this happens, which is interesting because the technology companies have jumped on board and gone, this is excellent. We've got a real opportunity here to be able to power our tools with real-time data, which is what we've all been screaming for. And the alternative to that has been screen scraping, where you've got to actually, it's a bit dubious as to whether you should be having people's logons and information, and was that safe sharing of data, etc., etc. And banks have been reticent to hand over the ownership and power of data sharing from themselves to their consumers. And so that's been a little melting pot of delay. So what has stopped the adoption is that there hasn't been a very good, slick marketing campaign to consumers to tell them how cool it will be, and that the technology companies need, if we get the data, that's great, but we need to be able to provide that data to organisations that can then utilise it for insights to power services that they then charge customers for, because you can't charge a customer for sharing their CDR data. That was part of the legislation. I think we touched on that when I spoke to you, because I said that I think that'll be one of the challenges to adoption for commercial organisations like banks is they've had to invest all this money in the infrastructure to upgrade their systems so that they store and prepare this data in a way that it can be shared on demand when a customer asks for it, but they can't charge the customer directly for that privilege. And so that was a real sort of sticking point for them to meet the guidelines. And so I think we've got past that now. All the banks are complying. And, when we first launched our master product repo, where we are actually ingesting all the bank product and pricing policy information and categorising that in the sort of the IP of what we do. When we first started, there were only 8 banks that we could give a high quality rating to. So of the other sort of 30 odd banks that we were looking at the time, we were unable to add a high quality rating to. We couldn't trust the data that they were sharing.
Okay. Yeah.
Now we've got over 20 lenders we had over 20 lenders in the repo last month. We're adding 13 this week and 13 next week that we've now tested over a month and are comfortable with. And most broker lender panels have got only sort of 40 to 50 lenders on their panel. So, and we're testing these lenders every single day to make sure that the data that they're releasing is reliable. So if I think about that over a 12-month period of going from 8 lenders to over 50 lenders with compliant, reliable, quality data, it means that internally they're really now got teams that are working on this.
Yeah.
So I think if we project that over another 12 months, you have over 100 lenders in there, plus all the non-bank lenders in there. All of a sudden people want to actually get a return on this investment, and they'll want to leverage services like ours.
Yeah, excellent. So how did it all come about then? Because your background isn't actually technology, is it?
Oh God, no.
So how have you ended up with this fintech juggernaut, which is it's becoming at the minute, isn't it? It's getting bigger and bigger and bigger.
It was a one of those sort of collision of a perfect storm of events that happened in my life back in 2015-16, and really I ultimately wanted to be able to solve the mess in the market. I'd worked in home loans and lending my entire adult life at that point in time, and I went on a retreat with some business friends of mine, with someone who became a mentor for me in the early stages of Moneycatcha, and we were talking about ways that you could disrupt an industry and by using technology. And it's not by building a shiny new widget and finding a square peg to fit a round hole kind of thing, finding a problem to fix. It was understanding a mess in a market, understanding that technology was terrible in that space, and how could you use technology to solve that problem. And that was really sort of the crux of what we were going away on this retreat. Could we adopt that philosophy and build something that was going to really be something that we could take to market in our industry and invest in? And so that was really where Moneycatcha was born. And our original first iteration of the technology was an end-to-end loan origination platform. Talking about that journey that we were referring to before, I had a very large ambition that I could solve that entire journey because my view of the world of the home loan journey is that technology is used at every single step of that journey. There's about 14 steps in a home loan journey from application through to settlement. And no one had stitched all of those technology platforms together. And because I didn't have a technology background, I had no idea about coding languages, interfaces, integrations, whatever. So I was like, well, if someone just stitched them all together, then we could get an application done in the same day.
Easy.
That was how, literally, there's obviously a bit more complex than that. But then I used some of my own money and worked with some pretty clever people initially, and we built a prototype. And we did get some support at that time and some startup rates to work with companies like Landgate for the titling system here, Equifax, PEXA, DocuSign. We used Census back then to validate things like email addresses and phone numbers. And we did an end-to-end application that had all the elements. So identifying a customer, assessing crude financial information, but certainly our basic set of information, but was that evaluation, creating documents, a sign-off workflow, so an authorization workflow underneath all of that to make sure that people was being authenticated properly, and settlement inside a PEXA window, and we did the entire flow in 90 minutes. So we proved that it was digitally possible to actually stitch all of this together if the technology actually was all congruent with each other. So if we all used Elixir to Cal Standard, for example, if we all had systems that were automated in terms of the APIs to each other so that the call and the response was automated, there was no human intervention. Now, that was a vanilla deal with a new purchase and everything was sweet. Yeah. The reality is that's such a small percentage of the product market. And that was really when I was like, let's take this concept to market, and I raised my first capital. And that was a very quick journey for a startup initially, because we happened to also be caught up in the period where fintechs in this country were pretty sexy. So there was a lot of support both from the banking sector, from the accounting and consulting sector.
Scalable.
Time,
isn't it? So,
it was. The industry is it's exciting from an investor's perspective, and also from the consultants were big into it, so the KPMGs and PwCs and things like that at the time. So we were caught up in a little bit of a hype era at that time, and we did sign a couple of pretty exciting customers to work on with some innovation programs and also some prototypes. And so the initial stages for me was really exciting, and I was at a time in my life where I could ride that wave, and I invested my own money in the beginning. So that kind of made the journey probably easier than a lot of other people would doing a startup journey. But believe me, I've had my ups and downs since then, and we're still here to tell the tale.
Yeah. How long did it take to get the concept actually working, the working concept?
Yeah. I think it's an interesting... I think what's become very understood over the last recent so I'd say from 2017 to 22, is a lot of technology companies went to market with prototypes. And what that was a working demo, and there was actually not a lot going on under the hood. And that when those products were sold as enterprise solutions and they went to work with those customers in their contracts, there was a very long lead time before that solution became production worthy. And I think, to answer your question, it was very quick to spin up a prototype that demonstrated what was possible. For you to now create a technology solution that services a financial services sector with very strong expectations around data protection, privacy rules, performance levels, you need to invest quite a lot of time and money to ensure that you've met their requirements. In saying that, you still do it faster than enterprise incumbent organisations if you know how to prioritise the product development. So we can still, we decided we've got a product roadmap of different features, and we look at releasing things either on a daily or a weekly basis. So new product features on not just one a month, or this isn't a project where we're going to release something new in 3 months. That's not how we work, but we do have to prioritise those releases sometimes where there's nothing new as a feature to our customers, but it means that we've enhanced data protection or performance or error notices or things like that, which they're not sexy, but they're incredibly important in order for you to have a validated and reliable piece of technology in the market.
So who was the first person that you brought into Moneycatcha? Was it a coder? Was it... I'm trying to work out how you went from this concept of like, this is frustrating, let's go on this little retreat, and then out the back of that you're like, right, I'm going to actually make this happen. I've got no tech background. Where do I start?
Yeah. I brought in... so what I decided was I had some mentors I was working with initially, and I brought one of them into the business sort of as a strategy person.
Right, okay.
And we decided we needed to bring in someone as a chief operations officer. And we felt that if we did that, we could outsource the technology product development at the time. Because we needed to understand what was it. We had the relationships and the connections within the financial services sector, and we felt it was better to leverage those than actually bring in someone who had technology experience, but not have the connections into the market.
Yeah.
So my strategy was build out the leadership and sort of sales side of the business from a connections perspective, outsource the product development until we understood what the customer, our end customer or our potential customers, the sector we were selling to, actually wanted in terms of product development. I think there's arguments for doing it both ways. And one thing I didn't have was a co-founder. It's always really been sort of my vision and my leadership in the company. Yeah. And for me, it's been really crystallizing because I still know we still want to be involved in as many home loan transactions in this country as possible. The vision for Moneycatcha really hasn't changed significantly. Or the purpose of Moneycatcha hasn't changed significantly, but it can also be incredibly lonely when you're in those down. Everyone wants to be with you on the high, but when the things start going wrong, everyone rats off the sinking ship kind of thing. And I think that's been the hardest part is the people I brought in the initial cohort of sort of mentors and advisors and support people. When we went through the COVID period, which really affected us as a company. Found it really difficult to go through that strenuous time. And that's when I started bringing everything in-house, including our product development. And so now we do everything in-house. And by then I'd understood what I needed my head of engineering or my CTO to actually be. I don't really know what they do, but I know what I need them to be, and I know what skill set I needed them to have. But before that, hiring someone into that role when I had no experience, it was really going to be the blind leading the blind, and I could have put anyone in there. So at least if we outsourced product development to a consultant, you're working on a contractual basis, and that was really easy to performance manage, whereas it's a bit different when they're in-house.
Yeah. So how big's the team then now with the operations team?
Yeah, so we've got team in Perth, Melbourne, Sydney, and I've got a team member in Queensland as well. So we would have, at last count, 4 or 5 in Perth. We've got 1 in Melbourne, 2 in Sydney, and then a couple more coming on board on the East Coast as well. That's really where, with the Stride Broker product, that's where the predominance of our customers have landed. That's where it's really interesting. We did a conference back in March, which was the Better Business Summit run by the Advisor magazine, which is a pretty big publication. Momentum Media is a publication that sits underneath that, and they service the broker market quite effectively. And I think there was something like, my numbers might be a bit wrong here, but you'll get the drift of the proportion. It was like 250 in Brisbane, 200 in Perth, 190 in Adelaide, and then 400 and 500 in Sydney and Melbourne. Yeah. So just significantly larger numbers.
Population wise as well, isn't it? Yeah.
Yeah, and just seems to be more brokers on the East Coast. Yeah. So I think that's kind of where we'll bolster that team next. That's what we're looking for is some people to work on the East Coast to service that market.
Don't fancy moving over east yourself?
No.
West is best, isn't it?
It is. I do like living here, and my daughter's settled here, and the property we just bought was with my parents as well. So we're all nice. Living on a large acreage.
Still in Swan Valley?
No, so I'm down in further down south now. Right. So that. It's a larger property with residents on it, so it just allows my parents to see their twilight years out with their granddaughter just over, around the corner. So it was really nice.
Very nice. So what are you excited about over the next 12 to 24 months? And that's one thing I didn't ask you on the last podcast. So what's in the pipeline now that you think is going to come to fruition that we're excited about?
Yeah, I think
that you
for
can talk
us
about?
being able to support enterprise customers who are really trying to reinvigorate the home loan journey for consumers and considering using the open banking data. So we can do instant product and pricing offers for them based on that data set, and being able to power their solutions is one of the most exciting opportunities for us, which it's always been a goal of working with these organisations, and they're really outside of the banks and lenders. So a whole new market for us that we had hoped would come out of the Stride Broker product, and that's really what's coming to fruition now. So that's kind of really exciting. And I think watching the open banking adoption levels over the next 12 months, I still think it's going to trickle, but the 12 months after that, I think is going to be really interesting. And seeing how that changes the power that consumers have in the home loan journey, I think that's pretty exciting.
Is there a way we can track the open banking adoption?
I imagine there would be especially through there's a few companies that are the CDR data providers. So they've created one of our sort of relationships. One of the commercial people we have a relationship with, they call themselves the poles and wires of the CDR highway. And so really, there's this whole. There's the virtual highway of data that needs to come from these large incumbent organisations, authorised by the consumer, to be sent to all these different, can go anywhere, that is to anyone that is accredited to be able to handle that data. And I think they would be definitely measuring the traffic of consent requests. So we would be able to I'll be able to tell you in 2 years' time how many consent requests we've managed.
Yep. And
I would imagine we'd be managing, a small amount over the first few months, and then we should see that hockey stick up, I imagine, in the next 12 to 18 months.
Tell you what we do then, we'll book you back in for another 2 years' time. We just keep catching up every 2 years, eh?
Hopefully I've retired many years after that, but maybe I'll still be around in 2 years. That'd be great.
Ruth, it's been an absolute pleasure catching up with you again. Thank you very much for taking the time out and coming down and recording the podcast.
My pleasure. Thank you.
Thank you very much.
Thanks for listening. Make sure you tune in the same time next week so you stay up to date with all the cash flow positive property updates.